Tensions at the border, the market is now in the red. The BSE Sensex has slipped 209.22 points or 0.26% to 80,587.62. Meanwhile, when we're talking about the Nifty 50, it's down by 71.95 points or 0.29% to 24,389. So currently, I'd like to show you exactly the current situation when we're talking about Sensex. Sensex is currently at 80,552.80. It's in the red and it has fallen now by 0.30%, which is down by 244.05. Now we're seeing this change in numbers, you can see, but currently it's still in red. And when we're talking about Nifty 50, it's currently at 24,376.65. It has fallen by 0.35% and it's reduced by, you can see the numbers changing, it's 80.65%. It has fallen down. So currently this is where the market stands at when we're talking about the current scenario and the situation between India and Pakistan. We are being joined by Dr. Sharad Kohli. He's a senior economist joining us on the telecast. Dr. Sharad Kohli, I'd like your understanding of the current situation that we're seeing in the how market is reacting with the tension that is prevailing currently between India and Pakistan. How are the investors supposed to tackle their way through the current situation since the market is in red without creating a sense of panic as well?
Good morning, Ria. Good morning to the viewers of NewsX. I think the market, considering the escalated tensions between India and Pakistan, the markets haven't done all that badly. Today, of course, it is down. But yesterday, it went up. And over the last few days, we've even seen the FPIs and the FIIs doing buying in the market. So the way people were anticipating that in anticipation of the escalated tensions or imminent, military action by India, the markets would be down, but surprisingly, markets haven't reacted as badly as they would have. I think this shows the confidence the investors have in the Indian markets. This also shows, Ria, that even if India takes action or when India takes action, it will only be a very temporary thing, as far as the markets are concerned. Yesterday, we got a response from Moody's, who told Pakistan that if this happens, you will be a bigger loser. It will not impact India as much economically. So I think this is a clear message from an international rating agency. And if you look at the Pakistan index, the KSE 100 index, that has fallen by more than 6% over the last few days. Massive fall. Whereas the Indian markets have actually gained ever since, Prime Minister Modi took the resolve that he will teach a lesson to the perpetrators. The markets ideally, in any other situation should have fallen down. The markets haven't fallen down. I think the market has confidence that Indian economy is strong. And such action taken by India will not have any major repercussion on Indian economy. However, having said that, I think the military action consequences, to what extent it would go, how long it will stretch, all that is unknown. So I would advise the investors, if you're a long-term investor, you can remain there. There is no problem. If you're a very short-term investor, you can just follow the trend. Some people trade and do very short-term. But I think mid-term investors should be cautious. They should stay away from the market. Because when this action happens, and tomorrow is the mock drill, I think when the action happens, market will take a jerk. So I think my advice to them is people who are mid-term, they should keep away. Otherwise, there is nothing wrong with Indian economy. It's doing great. We've had record GST collections. Our direct tax collections are doing very good. Inflation is under control. Forex reserves are accumulating. So Indian economy is doing absolutely perfectly. There's no problem. Just that this action is imminent and the traders and investors need to be cautious. Ria.
Yes, interesting take. Thank you so much, Dr. Sharad Kohli, for joining us on the telecast. As he rightly put it, India does not have a lot to lose. As Moody's has stated, that Pakistan has a lot more to lose in this current scenario. We are seeing how it's prevailing. India does not have a lot to lose, and currently the market is not reacting in the way that one would assume. And thank you so much, sir, for joining us on the telecast.